That is right, you heard me correct. We just put a sizable amount of money into USO for the long haul. I personally, at this point in time, don't feel comfortable investing long-term with USO. In this video, we're talking about why I changed my mind since making that video a month ago, and in other words, why we should all take another look at USO. Let's do it. What's going on, everybody? Welcome to my channel. My name is Matthew, and today we're talking all things USO. We've got 4 parts to this video today. First, a very brief recap on what is USO. Second, the huge fundamental shift in USO. And third, why I invested now and is it too late? Finally, fourth, how long I plan to hold for. Let's get right into it with first a super duper quick recap. What is USO? By now, hopefully you know that USO does not track the exact price of oil, but it tries to do something similar by buying and selling oil futures contracts. And a futures contract is just literally a contract that says you'll buy something in the future. Doesn't get much more self-explanatory than that. Boom, first one done. I told you it'd be quick. Let's move on to part 2. What fundamentals changed? Now, to really understand just how big of a fundamental change they made to their portfolio structure, let's take a quick look at how USO worked before. USO's old portfolio pretty much only held contracts for the front 2 months, meaning the current month, which is just the upcoming month, and then the month after that. This is awful because we are in this fancy thing called contango. And you don't want to tango with contango. That's a no tango from me, sir. Contango's no bueno. In its essence, its core, contango really just means this month's oil contracts are cheaper than next month's and the coming months. This means that when we're in contango, USO's old portfolio structure would sell their current month's contracts for pretty cheap, only to buy a more expensive contract for the next month. They were losing money and value every time they did this, and they did this every month. It's kind of like watching a slow motion train wreck where you know it can't really get any better. It's only going to get worse, but you kind of just stand there and you're like, oh man, darn. And to help you understand this a little better, we've got something really quick for you guys. That's right, a digestible example. Say I'm USO. I bought 2 current month oil contracts for $20 each, a total of $40. Come expiration time, they're only worth $15 each, or $30 total. They're going to expire. I have to sell them at $15 each. So overall, I lose $10 here. Now I have to buy the next current month's contract, which is $30 per contract. So not only did I lose $10, but I also started with 2 contracts, and now I can only afford 1. Obviously, that's an extreme example, but the point is this portfolio structure that they had cannot hang with contango. So what did USO do to change this? Obviously, they recognized it was a problem. It was just not feasible, and it's more easable to be feasible. I don't even know what I'm saying anymore, guys. Well, they completely changed the fundamentals of their portfolio, and I mean completely. Now, USO's target portfolio, in other words, what they want their portfolio to look like, looks a little something like this. Only 15% for the current month in July 2020 contracts, then 15% in August 2020, 15% in September 2020 contracts, and you guessed it, 15% in October 2020, but 5% in November 2020. I bet you didn't see that coming, did ya? 25% in December 2020, and all the way in June 2021, they have 10% of their portfolio. So not only is this less volatile, it is safer, it gives oil more time to recover before USO is forced to sell its contracts, and most importantly, it proves that you should smash that like button just like Jerome Powell is smashing that print money button at the US Mint. Hey, it's obviously worked for him so far, so it might just work for you. And now part 3 of this video, why did I invest now and is it too late to buy? These 2 questions are kind of one and the same because obviously if I thought it was too late, I probably wouldn't have gone in as hard as I did with this investment. The answer here, everybody, hinges on what you think oil prices will do moving forward. I think they're going up in the long run, and to dissect exactly why, we need to cover 3 things. 1. The historic price of oil. 2. USO's already massive profits. And I think you guys will have your eyes blown wide open on this one. Is that even an expression? And 3. A potential Uno reverse card on the supply and demand of oil. Let's start with number 1 by looking at a chart of the historic price of oil. To do that, let's go into the computer. This is a chart for oil prices since 1973. Let me just blow your minds real quick. This is about where we are today, about $32 for May 2020. Just out of curiosity, let's take a look at the recent peak. Oh cool, $164. No big deal. Now, many oil taker investors and analysts have pointed to 2008 as a reference point for another example of an oil surplus. So let's take a look at that. So generally during an oil surplus like we're in nowadays, and like we were in during the Great Recession, you'll see, like this, the price of oil drops. And it bottomed out during the Great Recession at about $50. Right now, we're at $32. From 32 to 50? That's about a 60% jump upwards. And yes, I know the world didn't shut down in 2008 and there was no Roni Rona to be found. However, this is the most comparable thing that we can reference in our recent history. And here's another point. I've changed the graph to show the past 10 years of oil price history starting with February 2010. In the first few years, oil's around $100. Then we fall down here to a range of about 40 to 60 bucks. Then we hover up here around $70, then come down to the 50s. So I'd say $60 is a pretty conservative and fair estimate for the average price of oil in the last 10 years. Take that average, cut it in half, and that's where we're at today, $30. Guys, oil is cheap right now. Like, oil is cheap with a capital C-H-E-A-P. Side note, I actually kind of like this angle. We might start incorporating this more in some future videos. And even with these low prices around $30, USO is making money. Check this out for number 2 of this part of the video, USO's unrealized profits. And make sure your socks are on snug because they might just get rocked in the next few minutes. Back into the computer. So let me explain what you're looking at here. On the left side, we have USO's actual holdings, how much they bought, and its current price as of yesterday, 5/19. On the right side, we have today's prices for oil, 5/20 for July, August, September, October, etc. What we're gonna do here is figure out just how much money USO made in one day, specifically today. All right, so their current contracts that they hold are organized by their market value. So their biggest holding is December 2020 contracts. As of yesterday, they were priced at $34.17. And as of today, they're priced at $34.96. They went up by 79 cents. For August, yesterday they were at 32, and now they're at 33. I'm not going to go through all of these, but you can pretty much see they all went up by, let's say, $1 to 90 cents. But we'll make it $1 for easy math.
Boom! 2 + 2 is 4. -1, that's 3. Quick maths.
So to keep things simple, we're going to just say that everything went up by $1 today. It's not too far of a stretch, and it's not a crazy day for oil either. Let's count them up. That's 32 grand here, 20 grand here, 20 grand here, 20 grand here, 12 grand here, 11 grand here, let's say 9 grand just to be cautious, and 6.5 grand here. Not to mention, I'm pretty sure USO bought these contracts in the 20s. This is how USO works. And on top of all that, yes, I have more to say. Reason number 3, a potential reversal in the works. No, I'm not talking about a reversal in USO because it's already kind of done that. I'm talking about a reversal in the supply and demand of oil. As many of you know, OPEC and other leading oil producers have been cutting oil production. It is crucial to realize that many of these big oil players like the Saudis can break even at prices like $10 for oil or $20 for oil. Right now, at these rates, even though they're very low, they're chilling. The United States, on the other hand, needs about $40 to break even, meaning that a lot of US producers could be forced to scale down or shut down even. So with major supply and production of oil being cut and potentially seeing US producers leave the scene, we could see a huge reversal in supply and demand. And as for the demand side, if you watched my previous video on why stocks went up a couple days ago, you'll know that Fed Chairman Powell expects to see us start a steady recovery in the economy by the second half of this year. States are reopening, people are going out and about, and they're starting to consume oil again. Not literally, but like in this way, you know, like. Now, I'll be honest with you guys, I'm starting to feel like I'm sounding a little one-sided here. So before you say,
when it crashes, scammers like you, Matthew, will disappear faster than a mic chasing by cat.
I get what you're trying to say. Clearly, my humongous influence on the stock market has been noticed. Now, all jokes aside, if you've watched my previous videos, I do always try and address both sides of a situation. Of course, everything I say here is simply my opinion and I am no expert. So to at least talk a little bit about the potential downsides for oil, we could see a prolonged period where states reopen and then are forced to close again because we're already seeing new hotspots and spikes in cases in states that have started to reopen. This could mean that oil demand could be reduced to similar levels to where it was before if states are stuck in this period of limbo. I don't want to make this sound like a surefire bet on USO. Of course, it's never easy money in the stock market, and if it is, it's very rare. So I'm talking to you, research both sides, please. But for the sake of the length of this video, I just wanted to share all the reasons why I personally bought USO, and I'm trusting you to be an advocate for yourself and to look at the downside as well. Now hold on, we're not just quite done yet. We still have part 4, how long am I going to hold? And guys, I always want to be completely transparent with you, so I've had a bit of an identity crisis lately as a trader or investor. I really don't know which one suits me, which one I want to fully pursue. On one hand, the daily charts, they call my name, but I see Warren Buffett in my dreams. After dabbling in both, I personally think long-term is the way to go. When you look out into the world, great wealth is rarely built on short swing trades or day trades or scalping and stuff like that. Great wealth is compounded. Great wealth is long-term. And yes, there are always many exceptions to this, and you can certainly do well as, say, a day trader, but this is just my 2 cents. And no disrespect to anyone who does quick trades. I respect it. I know it takes a lot of guts and it takes a lot of work, and you have to be really good at what you do. But I feel like if you watch this channel, and especially if you're subscribed, which you should do by the way, you should know what kind of investor I am. So I'm holding USO for the long term, probably over a year. And to some of you guys, that doesn't sound long term, but for me, hey, okay, I'm a young kid. That's long term enough. And one thing I want to own up to is I missed USO. By that I mean I missed the restructuring of their portfolio. I heard about it, I saw it, and I brushed it off as unsubstantial news. And to be quite honest, part of that was because I was intimidated by the oil and commodities market, something I didn't really understand. But after seeing how well USO has been doing lately, I faced my fears, I looked more into its portfolio, and I think this structure is going to serve it well in the long run. I think it's even still at an attractive price right now at around $24 to $25. I don't plan on selling anytime soon unless there's another fundamental shift in, say, their portfolio structure, or if there's a huge shift in macroeconomics. In the end, we should see all this madness resolve itself, and oil should be able to begin to recover. If you found any value in this video at all, whether it's just me reminding you about USO or maybe presenting some new information, please hit that like button, subscribe, and turn on those notifications. It seriously helps out this channel. As always, we'll end with the quote of the day. The only way to make sense out of change is to plunge into it, move with it, and join the dance. That quote is from Alan Watts, and I thought is very, very applicable to today. USO made a huge change in its structure, and you have to move with it. You have to look at it again. You have to dance with it, I guess. I don't even know what that means. But you could say I plunged into USO with a little investment. So if you haven't subscribed yet, come join our little family of financial independence advocates on this channel, and make sure to follow my Instagram where I post daily stories about my portfolio, stocks, books, mindset, side hustles, all that good stuff. Thank you guys so much for watching to this point in the video. You guys are the real MVPs. It means so much to me because I do put a lot of work into these, and it helps out the channel a lot. With that being said, I'll see you guys in the next one. Don't forget your peace and thank yous.